Good morning, gang. Happy Sunday morning. Okay, if you're watching this, hopefully it's before all the Sunday morning news shows come on, the Meet the Press or this week with whoever the ABC clown is this week. We can touch base on something that's going to be kind of important in regards to your savings. Okay. Now, a lot of people have 401ks, IRAs, money invested in the market whatsoever. And Friday was a great day, right? That the S&P for the first time ever crossed 5,000, okay? And the S&P was at about 4,000 when Potato Joe took office. So everybody's going, "Hey, look, we got 25% increase in the market here in 3 years. Good deal." Okay, so historical average about 7% a year. Okay, compounded, which is normal. Okay, but there's an issue to this that you may want to know, and I'm going to kind of go into a couple of things. Maybe you do know, maybe you don't. Maybe you guys remember the scandals from a couple of years ago with Robinhood. The platform, if you will, that all these college kids and stuff like that were day trading on and all that sort of stuff, right? Hey, I need money for beer tonight. Let's go take my tuition money that mom and dad gave me. I'm going to put $5,000 into Amazon at X, and by the end of the day, maybe I'll get lucky and I'll sell it for X and 50 cents, and I'll make my beer money for the weekend. That's what was going on. And this is the problem that we've got going in our economy right now is the froth, the funny money that's in the market is not real. Okay. How much money's out there on margin, meaning how much money is borrowed to buy stock. Go back to 1929, and that was one of the things that caused the economy to collapse. So what we're looking at today is the market capitalization. How much fresh money is getting put into the market and how long will it stay there? Now, I'm going to give you this. At the levels on a 100-day rolling moving average, at the levels we are at now for the market capitalization, there's only two types of events that have ever happened in the history of the stock market where we've had market 100-day moving average market capitalization rates at this point. And I know I'm going way over people's heads, but I'll break it down here for you. Okay. It happens after a big sell-off. Okay. All of a sudden, a bunch of money comes flooding into the market trying to buy stuff on the cheap. Think after we saw the multiple 1,000-point drops during COVID. Remember that? Turn on the news and the Dow was down 1,000 points for each day for days on end. Or go back to 9/11. The market sold off like crazy. And then all of a sudden, when we started getting to those bottoms, money came flooding in trying to buy stuff on sale. Good idea. Okay. The other time, and it's only happened twice in history, after there was no major sell-off that we've seen capitalization this high, was in October of 1929 and October of 1987. Do you remember what happened in those 2 years? You saw a market crash. Okay. Now, it's funny because on Friday, California federal representative, House of Representatives, California Congressman Brad Sherman stated glowing about the S&P being over 5,000. You can tell he knows nothing about finance. Okay. This was his quote. I'll just read this to you. "Well, what matters is the real economy, but you have the smartest people, the richest people on Wall Street betting that the real economy is going to do very well this summer. That's why they're buying stocks now. And if they're right, they're not always right. These polls will certainly turn around. The fact is that Biden has put together an outstanding set of legislative accomplishments. He may be the most accomplished president we've had, perhaps since Roosevelt. And I think that as people look and see what we're doing on infrastructure, etc., that Biden will win by a comfortable majority. I want to know how many days he spent with Hunter, because that has got to be the most crack-induced comment I've ever heard. First off, the money that's flowing into the market right now is not from the hoity-toity Wall Street bankers. It's from Joe Average out there right now with FOMO, fear of missing out. And this is normal in the stock market. If you look at this, people throwing money at the market, buying at the highs and selling at the lows. Oh my God, it's going to the moon, I've got to get on board. And so they buy. And then of course you have a sell-off. Oh my God, the world is going to hell, I've got to get out before I lose everything. Personal experience, I watched this. I took the phone calls after 9/11, watching people panic. Okay, this is silly school, if you will, thinking that it's good and you should be buying into the market here at these lofty highs. The money that's there right now is fleeting. It's borrowed. It's short-term trader type money. It's not people investing. You've got people out there day trading exchange traded funds. Okay, not your mutual funds like Vanguard or Fidelity or something like that, but the ETFs, the ones that do the same thing. Okay, day trading that stuff, trying to pick up a percentage point or whatever during the day. It's easy to do these days. Every online broker has 0% commissions, right? So you buy something at $100, it costs, let's say you buy 100 shares of something at $10, okay? It costs you $1,000. If it goes to $10.05, you now have what? $1,005 or whatever it is. So you made a couple of bucks, okay? It's not like you had to write it out because there was any sort of commission cost, even when it was the days of $4.95 equity trades. I'm not even going back to the days where you're paying $100, hundreds of dollars in commissions. This is insane when the left is trying to tell you to put money into the market because the Wall Street bankers are doing it. They're not, okay? They're lying flat out to you where the money's coming in. The money is coming in from people who think that we're going to the moon. Again, all right? Everybody's got these get-rich-quick schemes. Bitcoin is a perfect example, of get-rich-quick. Now, no problem. I will agree here. Bitcoin was at, 16,000 or something last summer? It's up over 40,000. Yeah, you damn near tripled your money. No question. You make money at it, okay? There's also all those people who bought Bitcoin a couple of years ago when it was at 60,000, and they haven't sniffed break even lately, okay? That's the problem. When you always see stuff go like this, and then when it spikes quickly. Why? Because there's just money thrown after it left and right. A lot of you guys are old enough to remember the dot-com era, okay? The late 90s, where, and I remember some of these, Pets.com, AutoBuyTel, they'd come up with an IPO, initial public offering. The stock would be publicly traded in the first day, okay? Whatever brokerage house was underwriting it or whatever would get investors into it, and the stock would start trading, and it'd go off at $15, $20 or something like that. And by the end of the day, it was like 60. And people were trying to get into any internet IPO they could because it was like a gold mine right off the get-go. The problem is it didn't last. Well, The people that got in on the IPO and bought it at 15, hey, great. They sold out during the day at 40, 45, 50, or whatever, doubled, tripled, quadrupled their money. But there were all those people that wanted to chase the returns that had to buy it from them at 45 and rode it all the way back down to zero over time because they didn't go anywhere any further from there. Now, I'm not giving anybody financial advice. I'm just telling you my personal opinion. There is so much froth in this market right now. This is such a bubble, if you remember that term from the dot-com era, or the housing bubble, or whatever. You know, we go back to 2008, and when the market crashed after that housing bubble, same scenario happened. Market went in the toilet, then the capitalization went back up. Okay. We haven't had any event that's caused the market to go in the toilet. We've just had the capitalization go up, which means what goes up must come down. And when it does, if most of the economists that are calling for end of the second, beginning of the third quarter are right, you got about 3 months maybe to play the market before it all goes bye-bye. Pay attention to some of these things. There is no free lunch. You guys all know that. But if something looks too good to be true, it ain't probably. It most certainly is. Pinball out.